Hi everyone, welcome to Investing Club. In this video, I'm going to be showing you a stock that I think has the potential to 10x in a very short amount of time over the next 2 to 3 years, and why this stock is very unique because it is a company that actually benefits when the housing market suffers. And before we get to the stock, I am not a financial advisor and this is not financial advice. You should always do your research before buying a stock, and this stock is especially risky, and definitely do not buy the stock just because you watch this video. You have to do your own research. So I'll start off with this article from CNBC. Consumer confidence in housing falls to the lowest level since the subprime crash, and that is the Great Recession of 2008. And so people aren't confident about the housing market right now, which makes sense. With millions of Americans filing for unemployment, how could you be optimistic about the housing market? It is very likely that we are about to start seeing a lot of foreclosures and defaults on mortgage payments. And so whenever I see an event like this happen, I think, is there a way that I can make money from it? Because whatever happens in the economy, there's usually a way to profit from it if you know where to look. So housing confidence is at its lowest level since November 2011, and 46% of people said it was a bad time to buy a home. So a lot of people are expecting a sharp drop in the housing market. And so that brings me to the stock I'm talking about in this video. And the stock is Altisource Solutions, ticker ASPS. And Altisource Solutions is a default mortgage servicer. And so what this company does is they provide the services for the foreclosure process. So this is a rare stock that actually benefits when foreclosures and mortgage defaults increase. And this is their first quarter 2020 presentation. Here are some of the impacts from the shutdown. We see that there have been moratoriums on foreclosure and eviction. And while you may think that that would help the housing market, this company actually sees it as an advantage to them in the longer term because it means that there is trouble on the horizon that will be felt at some point. And in addition to the forbearance programs, again, these are all signs that the housing market needs support from the government. So up until 2019, the housing market was doing fantastic. This is a long-term chart of delinquency rates on single-family homes. And so back in the 2008 recession, it spiked all the way up to around 11.5%. And since then, it has been going straight down. It is now at around 2%, and this is updated up to the end of 2019. And so the history of the stock is they had a huge run-up during this 2008 crisis because of the large amount of foreclosures, and these foreclosures really boosted the amount of earnings of this company. What I did here was I overlaid the long-term chart of the stock against the delinquency rates of single-family mortgages. And as more and more people start to default on their mortgages, as a result of that, this company went shooting up. I think it was over 10 times just because of the crazy amount of earnings that this company was bringing in. And again, this company has been lagging over the last 5 years because this is one of the best housing markets we've seen. So I got the idea from the stock from Kupperman. He is a fund manager who writes this blog at adventuresincapitalism.com. I will put a link to this article in the description, and here he talks about why he likes this stock. So this is a company that the management predicts in 2020 they should have between 60 and 70 million of operating cash flow. And this company is also in the process of selling some of their unprofitable businesses. So after they do that, it'll add another 10 to 30 million to the operating cash flow. And so we can take a look at this stock on Finuz. The market cap is currently around 150 million. And so when you're talking about a stock that can reasonably bring in 70 million in cash flow this year, this stock looks extremely undervalued. Something that's interesting to me is this stock does well in recessions and everyone expects it to do well. However, we saw a huge drop in the stock like most other stocks at the end of March. And I think that because of that, this is a great place to buy into this stock. I think back in the beginning of 2020 when this was a $19 to $20 stock, this was really where it was being fairly valued, even at a time where we didn't expect this whole shutdown to happen. Everyone thought the economy was doing good, and so that is when this stock is really at its lowest point. However, we've seen it gone lower even though there has been a real disruption in the economy. So this stock is currently at around $10. This stock is expected to have earnings start growing like crazy. We can take a look at fast graphs, and this is the operating cash flow. Again, there's projections for this cash flow to go up by a very high amount, and by the end of 2021, according to, if you value the stock based off the cash flows, this stock could be at $42. We can also look at the free cash flow because that's one of the more important metrics that I look at. And their free cash flow looks like it's projected to go shooting up. Part of this is because they are selling some of their unprofitable businesses, but this is going to be the most amount of free cash flow that this company has ever made. And so just to look at the big picture, to look at the earnings, what happened back in 2008 is their earnings went up by a large amount, and this stock went from $13 all the way to $160. This didn't happen right away during the housing crisis. This stock reached its peak at around the end of 2013, actually. There might be somewhat of a lag between the housing market and the performance of this stock, just because the foreclosures have to happen first for this company to be able to perform their services. And so again, taking a look at the free cash flow, if you value this thing at 15 times free cash flow, which the stock has historically been valued at, this stock would be $57 by the end of this year, which is great upside from $10 where it's trading at right now. Another thing to notice is this company has been doing a very large amount of share buybacks, and this company has only around half the amount of shares they had back in 2008 to 2010. We can take a look. In 2010, they had around 27 million shares outstanding, and that number has slowly dwindled, and now it's only around 15 million. So the number of shares for this company has been cut in half. This company has actually been using share buybacks in a productive way. So obviously the Great Recession in 2008 was the worst time for housing maybe ever. And so even though it might not be reasonable to expect the same amount of foreclosures this period as compared to 2008, the share count of this company has dropped by 50%. So even if this company only brings in half the earnings they did from 2008 to 2010, because there's half the shares, their earnings per share will be equivalent. Now, I'm really thinking about entering into a position on this stock. If you're someone who watches my videos, you know I have a large percentage of my portfolio in Bank OZK, and Bank OZK specializes in commercial real estate. So my portfolio is pretty exposed to real estate right now, and that might not be the best place to be, especially commercial real estate. And so I'm thinking of adding this stock to my portfolio as a sort of hedge against my Bank OZK position. And I might buy a long-term option that expires sometime next year, because I think that gives me the best risk to reward with this stock. You know, I think that this stock is either all or nothing. So I think there's really two scenarios that could play out over the next couple of years. The first one is that the government could continue putting the moratoriums on evictions and foreclosures, and that way people wouldn't be forced out of their houses when they're not able to pay their mortgage. So in that case, the amount of foreclosures and mortgage defaults would stay low, and this company probably wouldn't do that well. But I think the other situation presents a case where we're seeing record numbers of unemployment, and because of this, a lot of people will be foreclosing on their houses in the event that the government doesn't keep these mortgage payment deferrals in place for a long time. And again, in that situation, I think this stock has the potential to rocket up. So we can take a look at Thinkorswim, and I'm looking at specifically the farthest option that goes out for the stock is January 2021. So that is about 7 to 8 months from now, and it is a $12.50 strike price. So again, if we look at the fair value from the operating cash flow, this could be very well a $30 to $40 stock, at least by the end of next year, if we do see an uptick in foreclosures. And that makes the risk to reward on this options play very intriguing to me. The option currently costs $240, and right now the break even is $10.95, and even at expiration, the break even is only around $14.90. Before this large drop in March, the stock price was trading over the $14.50. They were a $18 to $20 stock, and that was during a time where people thought the economy was still going to do well and we would still see a strong housing market, which is bad for this company. So I think even if the government is able to really reduce the amount of foreclosures, even if we go back to as strong a housing market as last year, this company is just plain undervalued right now, even if foreclosures don't go up. And so because of that, I really don't see much downside. Even in the worst case scenario for this company, that is the housing market staying strong, they should still be over $15 by the end of this year. And if we look out forward and we say that this stock, just for an example, this stock is $30 at expiration, then this contract would be worth around $1,600. So that would be me paying $240 now and having it be worth $1,600, which is, I don't know, what is that, a 6 times or 7 times return on my investment. So I think I'm probably going to enter into this contract. I'm thinking of doing the options play just because of the all or nothing nature of this company. I think we're either going to see a huge increase in foreclosures, or things are going to stay pretty stable. And so in that way, with this option, I'm limiting my risk, and I am still giving myself the potential to see a very large return with this stock. So that's it about this company. It's probably one you've never heard of before. Let me know in the comments if it seems interesting to you, and I will make a update video if anything happens with this stock. So if you like this video, leave a thumbs up, hit subscribe if you haven't already, and I will see you on the next video.